Welcome back to Bunnex Investment Group. In this video, I'm going to teach you the daily bias prediction strategy, whereby you are able to predict what each day will actually bring out. Alright, so without further ado, let's jump right in. So basically, what is the daily bias? Daily bias is the anticipated direction price is likely to take for the day, bullish, bearish, or range bound. You'll be able to actually predict what this particular day is going to be. By predicting, it doesn't mean that you're going to do this 100%, but you have a very high probability of predicting what the day will actually bring. It helps traders to avoid going against the smart money flow and stay on the right side of the market. So it will actually help you to understand or know whether you're going to be buying or selling for that particular day or actually staying out of the markets. Alright, so why does the daily bias matter? It matters because trading against the bias leads to frustration. You'd find yourself being trapped on the wrong side of the markets, and then trading with it improves win rate, entry precision, and confidence. So basically, these actually are factors that comes into play when you understand the daily bias. So it basically tells you whether you are going to buy dips or sell rallies, or other strategies that you use can actually be applied when you understand the daily bias prediction strategy. Alright, so you are going to learn the daily candle structure, the 3-candle theory, and then the entry prediction. Basically, these only 3 things, but much of the time we will be on the charts, not on the slides. So without further ado, let's jump right off the charts. But before we do so, I just want to personally invite you to join my one-on-one mentorship program. If you are serious about turning your trading into a powerful and sustainable source of income, this is for you. Use the link that I've left in the description box below. I only take a few students on a first come, first served basis. See you on the other side. Alright, so let's jump right over the trading view so that we can actually learn how to predict the daily bias. Alright, so basically when we are predicting the daily bias, we need to be on the daily time frame, like what I am on right now. So on the daily time frame, this is Euro JPY. I'm going to define first the principle that you are going to use and the principle that you are going to apply whenever you are to predict the daily bias. So here I have my candles. The theory states that whenever you come to the daily bias, you need to see 2 previous candles, and on those previous candles, you are going to require a candle that breaks the low and closes below that low, or breaks the high and closes above that high. If that is the case, you take the direction of that particular candle. I'll repeat again. Whenever you come to the daily bias, in this particular case, I have my 2 candles, this green and this red candle. We can see this is the low of this green candle and this is the high of this green candle. And on this following candle, which is the red candle, we can see that it broke this low of the previous green candle, and after breaking that low of the previous green candle, it closed right below that low. Therefore, the following candle will be a red candle, right? That following candle, we say it will be a red candle that actually breaks through the low of this candle, right? So we have built a theory that is stating this particular way of prediction. We've said when we break the low, close below that low, we expect the following candle to break the low of this candle, right? So with that in mind, let's actually have a few examples before we go into a replay mode. So in this particular case, you can see this actually broke this low, right? So since it broke this low and closed below that low, we can expect that the following candle, which is the following after this one, is going to break this low, right? And that actually occurred. You can see it broke the low and it closed right below that low, right? So the following candle we were expecting that the following candle after this one, since it broke and closed below, we're expecting the following candle to as well break this low of the daily time frame, and it actually broke that low. We can see the market actually went below this low, right? So basically that is how it happens. So let's now get into replay to see what or how we can actually go in line. So so at this particular point, we've said the next candle, since this candle has broken the low and closed below the low, we're expecting the next candle to break this low, right? So the next candle actually broke this low, we can see, going to the downside. What happened here? This candle closed within the structure of this candle. Therefore, we were biasless. We did not see any trend. Same applies here. We can see that this one is right within this particular candle body. So there's no entry or there's no bias. Same applies here. We can see there is no entry. Why? Because it closed within the body. But here, what do we see? We can see that the market actually broke this low. It broke this low. And after breaking that low, it closed right below that low. Meaning that we are expecting the next candle to break this low. Therefore, our bias for this particular day will be sells or shorts, right? Let's see what happened, right? Can we see it actually broke this particular low, right? So in this particular case, we are still anticipating as well that since the market has broken the low, but it failed to close below the low. Therefore, in this particular instance, we are not expecting anything. It's biasless. It broke the low as what we were expecting, but it failed to close right below this low. Therefore, it's biasless. Let's see. This next candle it broke the high, but did not close above the high. Therefore, we are biasless. Right. Here, we can see that this candle broke the high, a high that was here, and after breaking the high, we can see it closed right above that high. Therefore, our bias for the next coming day will be basically to break this high. We want to see a candle that breaks this high. So on this coming candle, we will be playing to get longs, or we'll be playing to get high buys, so that we satisfy and our targets are right at the high of the candle, right? The entries will definitely be made on the lower time frames, of course, right? We can see this candle, although it was just shy of the high, but it went right to the upside. Our bullish bias was satisfied, right? Here, after this candle and that candle, there's no bias, because although it broke the low high, it did not close above the high, right? In this particular case, no bias. Although it broke this low, it did not close below the low. Same applies to this one. So there was no bias. Still no bias. Here we now have a case. We can see that we broke this high, and after breaking that high, what did we get? We got a closure above this high. So in this particular case, we are in bias mode, in bullish mode, where we want to see break of this particular candle. You can see we went to the upside. So basically this helps us to build the bias of the daily bias, and all that you need to do is to basically go to the lower time frames, and on the lower time frames, you know whether for that particular day you are buying or you are selling. And when you know whether you are buying or you are selling, it means that you are going to have a higher probability of winning. On that note, we've come to the end of our today's video. Thank you for watching. Join the free Telegram channel that I'll leave in the description box below. See you in the next one.